couple of 2023 IPO candidates started to be floated. Obviously, we've been hearing about Reddit and Stripe for a while, but ARM confidentially filed for an IPO back in April, and they're seeking to raise between 8 and 10 billion later this year. And that would be a pretty big deal for SoftBank, which owns the firm. And that could, I guess, save SoftBank, which has had just a brutal run with the two different opportunity
why would
funds
this save SoftBank? The ARM deal is being done. What's the valuation it's being done at?
SoftBank acquired ARM for $32 billion in 2016. They don't know the valuation right now. They haven't put that out there yet.
I mean, they were originally looking for anywhere from 30 to 70, but I mean, Brad, where do you think that comes out?
I have no idea. I think that, they're shopping to get these anchor tenants into ARM. If the IPO market was super hot and this was really easy to get done, this would have been done, So I think, they're tiptoeing out because they need to get it into the public market. But, I think that anybody who does an IPO today, is going to demand a rate of return into that offering that is a significant margin of safety relative to all deals that were done in 20 and 21. And what that means is, on the roadshow, investment banks go and they try to drum up demand. They want to have anchors in the IPO book. They call firms like ours. They call strategic investors. They want to size up what that is. And, they give you their expectation of fair value or where they think the IPO will trade to. Of course, you meet with management. You ascertain and develop your own expectations of fair value. What I'm saying is maybe in the peak, in 20 and 21, people were getting thinner and thinner in terms of the margin of safety they demand. My expectations, whether it's ARM, whether it's Databricks or other companies that are starting to queue up, and these are fantastic companies, right? Make no mistake about it. Nvidia tried to buy ARM, and Databricks is doing over $1 billion in revenue, growing extraordinarily fast, led by an incredible team. But in order to get into the public markets, they have to, step in with a bigger discount than they would have, pre this correction.
And just to put some numbers on it, ARM had agreed to be acquired by Nvidia for $40 billion before the talks fell through. That was due to regulatory scrutiny. Bloomberg says ARM is aiming for a valuation of $70 billion. Obviously, there's no confirmation about that. That's just the news, hopefully intelligently speculating about it.
What exactly would you be buying for $70 billion?
Yeah, I thought
they missed it.
Yeah.
ARM had a window where they had to make some really important product decisions to be able to actually have reference designs that actually made sense beyond just simple mobile processors and CPUs, and they don't have any of that. So they have a good cash cow business. It's probably worth $25 billion. They paid 30 some odd.
32. Yeah.
They could have gotten it out for 40 something, but it's a mid-20s billion dollar company. No more. And if you buy it at the 20s, you're buying a cash flow yielding asset.
And
good luck to all the players, I guess is what I would say.
Clearly, it's a function of SoftBank seeking liquidity, right? I mean, they've had this position for how many years now? 4 years?
No more. I think this was
6, maybe
6 years,
something like that. Yeah.
When did they buy it? Was it 2016? I think it was longer. Yeah, 2016 they bought it. So this has been.
And in the fiscal year ending March, the Vision Fund alone took a $32 billion write down. Obviously, SoftBank has a big chunk of the Vision Fund.
But this is not in the Vision
Fund. And
it's
not in the Vision Fund, exactly.
This is on balance sheet.
It's on balance sheet. Yeah. But it's clearly a liquidity driver for them. I don't think that this is, first of all, Jason, I don't think the point about SoftBank needs saving is necessarily true. It's not a company that needs saving, but they've certainly taken some hits.
Well, they could use a win, is what my point. Yeah.
Yeah, they could use a win, but
the last two quarterly calls, Masayoshi-san was pretty repentant and humble.
Right.
In fact, he used that exact language. We talked about it here.
So there's a big liquidity need at some point for the business. So they can get this thing out and get liquid on it. It would certainly support the balance sheet more than anything.
The market is on a tear this year, Brad. Is there, now that everybody's buying back into tech stocks, I guess two questions. Why is everybody suddenly buying into tech stocks when people think there's going to be a recession and consumers have run out of money? And what's the thinking here of why so much money has gone to tech and this incredible rally It's been great to watch, but people seem to be perplexed by the rally. And then the Fed, even though they didn't do a rate hike, seemed to put cold water on and say, hey, listen, don't get ahead of yourselves. We're going to probably do rate hikes later in the year.
We all have short memories. Tech had a devastating year in 2022. So this is a bit of a reversion to the mean, right? If you remember the chart we showed a lot on this pod last year starting at the end of 2021, was that we were trading at, multiples that were, 50 to 70% above their 10-year average. And at the trough, we were trading about 30 to 40% below the 10-year average, right? So the market corrected. It overshoots on the upside because rates went to zero. And by the end of 2022, when you had Larry Summers and others who were going out and saying, we don't know what the upper bound of inflation and rates is, that's really scary to the markets. And so you had this overshoot to the downside. We're still trading below the 10-year average for internet and software companies based upon our numbers. And so when you look at this, as we said at the end of last year, the framework changed early in this year. All of 22 was about two things: is inflation going higher and are rates going higher? And those things are debilitating for growth assets and growth multiples. By the beginning of this year, we started to have confidence that inflation had peaked, which meant that rates were largely in kind of, spitting distance of their final destination. And the framework shift to economy. Are we going to have a hard landing? Now, remember, at the start of the year, Mike Wilson from Morgan Stanley, who give him credit, made the call in 2022. He said 22 was going to be awful. He was right. But he stayed in that bearish position at the beginning of 2021, said the economy is going to hit the skids in Q1, and that we're going to revisit 3,000 or 3,200 on the S&P. Instead, we're sitting at 4,300. So he was tragically wrong at the beginning of this year because, again, he was fighting, I think, the last battle that was won, as opposed to looking ahead and saying, this is no longer about rates and inflation. So the NASDAQ has moved 30% to start this year. The Fed said yesterday, we're hitting pause. The quote from Chairman Powell that has everybody a little bit perplexed is, on the one hand, he says we're data dependent. On the other hand, he said we're likely to have more rate hikes, right? And that rates are going to stay high for a couple of years. Well, if we're you can't have it both ways. If we're data dependent, we have a hard landing like Stan Druckenmiller thinks we're going to have in Q4 of this year, then rates are going to get cut. But the market seems to like this. And let's talk about where we are. The 10 years at about 3.7. The S&P is basically flat in terms of where it was and where it was before and where it was after the rate hike announcement. The economy appears to be reasonably good. 80% of earnings in Q1 beat. The guides were okay. Stan Druckenmiller said, I shifted. He pulled forward when he thought we were going to have a hard landing based upon the bank crisis, which now feels like it's a distant memory for many. And he's now calling for potentially a hard landing in Q4. So the Fed just came out and said, no, we're not going to have a hard landing in Q4. We think we're going to have 1% growth. They think that inflation to end the year is going to be at 3.2% versus the 3.7% Goldman consensus. What I would say is, we've moved, but we're still below the 10-year average. But you have to start paying attention now to individual stocks that have likely gotten ahead of themselves, or where they've taken
What's an example of that? Who's gotten ahead of themselves?
A lot of the return.
Facebook, Apple, Microsoft?
I think a lot of the AI-related stocks are now at or within 10% of our end-of-year price target. And when you see that, take something like Nvidia. If I'm playing at home or I'm a professional investor, I may say, I'm going to go sell some long-dated calls to buy a little protection to the downside. I don't think there's any problems with Nvidia. I think they're going to continue to perform. I think they'll beat their numbers for the balance of the year. But, remember, at the start of the year, people thought they were going to miss their numbers for data center. People thought data center revenues this year were going to be negative. And they just revised their guide from $7 billion in Q2 to $11 billion in Q2. So they've absolutely blistered their numbers. And the stock's gone from $125, to over $400